Imagine bleeding thousands of dollars a day during the spring rush.
Oh, that is the worst feeling.
Right. Your main commercial mower just died on a huge property. You need a replacement immediately before you lose your best clients.
Yeah, time is absolutely critical there.
Exactly. But then the bank rejects your equipment loan application. And they reject it over a tiny $29 overdraft fee.
I mean, I see it all the time. It is crazy.
This absolute nightmare happens every single day to hardworking crews.
It really happens far more often than people realize. It destroys businesses that are otherwise highly profitable.
Welcome to the Deep Dive. Today, we are looking at a very specific stack of sources.
Yes, some really fascinating stuff.
We have financial playbooks and commercial lender guidelines. We also have equipment financing research targeted at commercial operators.
It is a lot to cover.
It is. So our mission today is very simple. We want to figure out how you can stop bleeding cash. We want to unlock the premium funding you actually deserve.
It is entirely possible to take control of this process. You just have to know the rules of the game.
Right. And the most common question operators ask is usually the wrong one. They simply ask if they qualify for equipment money.
Yeah, they do.
They think getting a simple yes or no is the ultimate goal.
But that is the wrong mindset entirely. I mean, I hear it every single day in the commercial finance world.
So what is the better approach then?
Well, the better question is how to prepare properly. You need to ask how to prepare before you even apply.
Because you want to qualify on the absolute strongest terms possible. Right capital at the right time always starts with preparation.
Exactly.
If you just go in blind, you're asking for trouble.
You really are. And the stakes are incredibly high for operators right now. New equipment prices jumped 25 to 35% recently.
Wow, so a new commercial mower now costs up to $20,000.
Yeah, easily.
Applying blind for that kind of money is a terrible idea.
You cannot just walk into a bank and demand that cash. You need a solid financial foundation first.
Think of it like a professional planting strategy. I mean, applying blind is like planting seeds in completely dead soil.
That is a great way to look at it.
You must prepare the ground first to see any actual growth.
Right. So we need to move from general preparation to a specific target. There is a precise revenue threshold you must aim for.
Okay, let us get right into the actual numbers then. What is the specific target operators need to hit?
You need $20,000 per month in gross revenue.
$20,000.
Yes. That specific number is where premium rates finally open up.
That is a serious target for a smaller crew. It takes a lot of hard work to hit that consistently.
It definitely does.
So what happens to crews who operate below that mark? Do they just get rejected instantly by the lenders?
No, not necessarily. I want to give you the honest truth here. Funding still works at $10,000 a month.
Okay.
Lenders will still look at your application.
But there's an expensive catch to that approval.
A very big catch, yeah. Your rates climb much higher, and your terms shorten significantly.
Yikes. So the math gets incredibly tight for your daily operations.
Exactly. Tighter terms mean higher monthly payments. That strangles your cash flow during the slower months.
So your primary mission is hitting $20,000 in consistent monthly deposits. You must do this before officially applying.
That is exactly the goal. 3 or 4 months of clean statements changes everything for you.
Oh, wow.
Yeah. It proves to lenders that your cash flow is highly stable.
And I imagine the timing of your application matters too.
Oh, absolutely. The sunshining season is the easiest time to hit this. You have maximum revenue coming in during the peak spring rush.
So use that peak performance to secure your capital. Do not wait for the slow season to ask for money.
Right.
So if $20,000 is the magic number, an underwriter is not just going to take your word for it.
No, they certainly are not.
They are going to hunt for a clear paper trail. They need absolute proof of that financial stability.
Yes, they do.
What exactly are they hunting for in your files?
Well, paperwork is where so many talented operators fail. There are 5 exact documents you need to gather.
Just 5.
Just 5. But these 5 documents prove your business is actually real.
Okay, let us walk through this specific checklist for the listener. What is document number 1?
Number 1 is 3 months of business bank statements. They must show $20,000 plus in actual cash deposits.
So not just invoices you sent out to clients, they want to see the cash actually collected and cleared.
Exactly. Underwriters only care about cleared cash.
Makes sense.
Document 2 is your most recent business tax return.
Okay, that verifies your annual claims match your monthly deposits. What is the third document on the list?
Number 3 is a driver license matching your application address.
Oh, really?
Yeah. This prevents identity fraud in the commercial finance space.
It sounds so simple, but moving shops could delay everything. You have to keep your official addresses updated.
Definitely. Document 4 is a void check from your daily operating account.
I assume lenders need to know where to send the funds.
Right. That ensures the money hits the right bank account quickly.
And what is the final piece of the puzzle?
Number 5 is a highly detailed equipment quote. It needs the VIN, year, make, model, and total price.
Because the bank needs to know what asset secures the loan. They will not just hand you a blank check.
Exactly. They need a specific quote for that exact new mower.
Here is where the psychology of underwriting gets interesting to me. You submit these 5 perfect documents.
Right.
But what hidden details actually kill your approvals? Like, what red flags make an underwriter reject you instantly?
I will answer that directly. Negative balances destroy your chances immediately.
Instantly.
Yes. They show a complete lack of cash flow control.
I mean, if you hit negative numbers, you are operating on fumes. What else scares them away?
Excessive overdrafts are immediate red flags. Lenders hate seeing them on any business bank statement.
Wait, what if it's just a tiny $29 fee? Maybe an automatic software subscription hit a day early?
It does not matter.
Does a tiny mistake really ruin a $20,000 loan?
Yes, it really does. Even one $29 fee signals major risk.
Wow.
An underwriter looking at your statements is like a mechanic. They are doing a stress test on your financial engine.
Okay.
That tiny fee is a microfracture in the engine block. It proves the engine will blow under the pressure of debt.
That makes perfect sense, actually. They do not care about the size of the fee. They care about what the fee represents regarding your safety cushion.
Exactly. Also, deposits that do not match your stated revenue cause rejections.
Right. What about the classic mistake of mixing personal and business funds?
Oh, mixing personal and business funds in one account is fatal.
Fatal?
Yes. It completely breaks the underwriter risk algorithm.
How does it break the algorithm exactly?
Well, they cannot calculate your true business expenses. Like, they cannot tell if you're buying commercial parts or groceries.
Ah, I see.
To a bank, any financial ambiguity equals immediate, unquantifiable risk. So they will just reject the file to save themselves time.
Wow. Spotting these paperwork errors leads to fixing them quickly. But let us be real for a moment.
Sure.
Many operators are running incredibly fast and things get messy.
Yeah.
What do you do if your statements are a complete mess today?
You take a breath and you follow a plan. We use a simple 30-day fix list for this exact situation.
Let us give the listener this specific action plan. What is the very first step to clean up the mess?
Fix 1. Open a strictly dedicated business checking account today. Run every single deposit and expense through it.
This isolates your business cash flow entirely, so no more buying personal coffee with the mower money.
Never again.
Right.
Fix 2 is critical for your approval odds. Stop the overdrafts entirely for the next 30 days.
You have to build that safety cushion and protect it. Do not let any automatic payments drain you to zero.
Exactly.
What is the third fix on this list?
Fix 3, pay down your revolving credit card balances. Get them below 30% of your total credit limit.
I want to challenge that point for a second.
Oh.
We are talking about financing a piece of commercial equipment.
Right.
Why does personal credit matter for a business mower loan?
Personal credit still matters greatly on equipment loans, especially for smaller operators who own the business completely.
Because the owner, basically, is the business at that stage.
Precisely. Your personal credit shows your overall financial character.
Okay.
If your personal cards are maxed out, underwriters get very nervous. They assume you will treat the business debt the same way.
So let me summarize this strategy for the listener. 30 days of clean statements plus paid down cards works wonders.
It effectively doubles your approval odds in just 1 month.
That is a massive return for 30 days of discipline.
It really is.
Fixing your statements prepares you for the underwriter review. But you also need to understand how these underwriters think.
Right. They use specific filters to judge every application.
Okay, so break down filter number 1 for us.
Filter 1 is your specific industry. Some lenders love this sector, and some actively avoid it.
That feels incredibly arbitrary. Even if my credit is stellar, a bank might just reject me.
Unfortunately, yes.
How is an operator supposed to fight against an industry bias?
You do not fight the bank directly. You use the commercial finance marketplace.
Okay.
It automatically routes your file to eager lenders. It completely bypasses the banks that hate seasonal businesses.
So the marketplace matches you with lenders who actually want your business.
Yeah.
That saves a massive amount of wasted time and sheer frustration.
Exactly.
What is the second filter underwriters use?
Filter 2 is your exact credit tier. 720 plus opens the premium rates we talked about.
That is the gold standard for borrowing money. What happens is your score drops below that tier.
Well, 680 opens the standard rates. 620 opens equipment secured rates.
And if an operator falls below 620, are they just locked out of getting new machines entirely?
No. Below 620 needs a cosigner or a larger down payment. It is harder, but it is still very possible.
That is good to know. What is the third and final filter?
Filter 3 is your total loan size.
Okay.
Under 150,000 uses a simplified application process.
That threshold covers most trucks and commercial mower fleets.
Yeah, it covers almost all daily operational equipment for these crews.
Right.
Above that amount triggers full, detailed underwriting. They will look much deeper into your financials.
Underwriters also look for a specific ratio, right? They do not just look at your gross revenue number.
Right. They look closely at your debt service coverage ratio.
Right.
We call it DSCR in the finance world.
Explain the mechanics of that ratio for the listener. How does an underwriter actually calculate your DSCR?
You need 1.25 times the cash to pay.
Okay.
Let us say your new loan payment is $1,000. You need $1,250 in free cash flow.
So you need the $1,000 to pay the actual debt. And the extra $250 is the mandatory safety buffer.
Exactly. Lenders want to see that buffer before they approve anything. That extra cash flow proves you have breathing room.
Passing those 3 underwriter filters leads to the victory moment. I want to shift gears and talk about what happens next.
Sure.
Because when all this preparation finally pays off, it changes everything.
Oh, this is truly the best part of the whole process. I love walking through what approval actually feels like.
Set the scene for us. Paint the picture of a successful funding process.
Picture the email arriving on a random Tuesday afternoon. The subject line simply says, approved.
Oh man, that has to be an incredible feeling of relief. What is actually inside that email?
3 to 5 hand-matched offers are attached to the message. They show the monthly payment, term, and total cost clearly.
So there are no hidden fees or guessing games involved. You see exactly what the money will cost your business.
Right. Then the no-cost funding advisor calls you within an hour. They walk you through the math of each option.
They help you pick the smartest choice for your cash flow. And the timeline moves incredibly fast from that moment.
Very fast. Picture signing digital documents from your truck cab Friday morning.
You do not even have to drive to a bank branch. You handle the paperwork right from the job site.
Exactly. Then picture the dealer calling Monday to schedule your delivery.
Nice.
The funds went straight to them to buy the machine.
And then the real magic happens on Wednesday.
Yes. Picture the new mower running its first lawn on Wednesday. That is 7 days from approval to first revenue.
Wow, that speed is an absolute game changer. Picture your first invoice going out that same Friday.
It is amazing. The math completely changes the day the new equipment lands.
A faster and more reliable machine means you finish jobs quicker. You can confidently take on more properties without fearing breakdowns.
Exactly.
Fast capital prevents lost jobs and angry clients. Because if your old mower dies during the spring rush, you bleed money.
You really do.
Every hour it sits in the shop costs you future referrals.
But experiencing that fast timeline requires a very simple first step. You do not just sit around and guess if you are ready.
So what is the actual first action step to take today?
It is the pre-qualification form. It is incredibly easy.
How long does it actually take? Operators are insanely busy during the season.
It takes just 2 minutes to complete the form.
2 minutes.
Yes. And most importantly, it uses a soft pull and never a hard pull.
Let us clarify the mechanics of a soft pull. It means checking your financing options does not hurt your credit score.
Right.
A hard pull drops your score, but a soft pull protects it.
That is correct. You can check your real options without any risk.
What kind of information does this 2-minute form ask for?
It asks for your business name and time in business. It asks for your revenue tier and loan amount.
Okay.
It also asks what you plan to use the funds for.
And it asks for your general credit range, too.
Yes. Based on that data, the commercial finance marketplace goes to work. It returns 3 to 5 matches based on your profile.
How fast do those specific matches show up?
These hand-matched offers arrive within 24 to 48 hours.
That gives the operator real options incredibly quickly. I mean, they can make an informed decision without waiting weeks.
Exactly. Then the no-cost funding advisor walks through every single offer. They explain the true cost of each option clearly.
They decode all the complex financial terms for you. They translate banker talk into real operational math.
They do. They also stay with you for your future deals. They become a long-term partner for your business growth.
Knowing these steps means deciding your immediate action plan right now. It is time to evaluate where your business stands today.
I am going to be very direct with you on this.
Who exactly should fill out that pre-qualification form today?
Well, if you sit at $20,000 monthly with clean statements and you have an equipment quote ready right now,
Okay.
you should absolutely pre-qualify today. You are in the strongest possible position to win premium rates.
What if a crew is close but not quite there yet? Say they sit between $10,000 and $20,000 monthly.
Spend 30 days hitting the 20,000 target first. Clean up your statements using the dedicated account fix.
Right.
Stop the overdrafts entirely.
Build that safety cushion and run your business strictly by the book.
Yes. Then you can safely pre-qualify and get much better terms.
And what if a smaller crew is just starting out? What if you sit below $10,000 today?
Use the peak season to grow your top line first.
Yeah.
Focus entirely on adding new customers and banking the cash.
Where do operators go to take that 2-minute first step?
The free 2-minute form lives at BusinessLoan.Directory.
Let me repeat that clearly so you can check it out. That is BusinessLoan.Directory. Make sure you pause and type that out exactly.
Right capital at the right time is everything in this industry. It really dictates your future success.
That is the difference between a crew that successfully scales up and a crew that merely survives the grueling season.
I want to leave you with a final thought to consider. Labor costs will jump 20% by 2029.
Wow. Finding good, reliable workers is only going to get much harder. The cost of human labor is skyrocketing everywhere.
Smarter equipment financing is your best defense against shrinking margins. Better, faster machines effectively replace missing labor.
So prepare the ground properly for your business to grow. Stop planting your seeds in completely dead soil.
Get your bank statements clean and organized. Then go get the exact capital you need to dominate your market. Your future growth completely depends on the preparation you do today.